Good evening, everyone, and welcome to our presentation on Outlive, a global auto safety supplier. My name is Tommy, and I'm representing the Stockholm School of Economics together with my teammates Yining Wang, Kara Pham, and Fredrik Sundelin. Our agenda for today looks like the following, and I will start off with a quick summary of our investment case. And with that said, we initiate our coverage of Outlive with a hold recommendation at a target price of 71 USD, as compared to the last Friday's closing price of 66. We justify our hold recommendation since we believe there is currently a balance between the investment highlights of the firm and the risks it faces, and that most of the growth potential has already been priced into the stock. And before moving on to the firm itself, we would like to put things into perspective. Every day there are countless road accidents happening, leading to 1.3 million deaths annually. This is a huge number, and it keeps growing. And it is for this exact reason that Outlive exists as a firm. In fact, they are currently the largest auto safety supplier in the world, saving over 25,000 lives, very precious lives, every year through their products. They currently enjoy a market share of 36% globally and have a turnover of 8.2 billion USD. They have a broad product range that not only includes the traditional safety items such as seat belts and airbags, but also steering wheels and active safety systems, which is a new breed of systems that aim to prevent accidents from happening rather than reacting to them. Furthermore, they are present in all major car markets in the world, including the very important growth markets of China and India. In addition to that, they also have a very diversified customer base, ranging from mainstream brands to premium ones, enabling them to sell the right products to the right segments. That was a little bit about the firm itself, and now Yining will take us through the market outlooks and highlights.
Thank you very much, Tommy. As we can see, Outlive is currently engaged in the light vehicle safety market. This market is mainly driven by two key factors, which is light vehicle production and safety value per vehicle. When we first look at the light vehicle production, we see that a recovery in North America, coupled with strong growth in emerging markets, will offset a light vehicle production decline in Europe. Hence, on a global basis, we expect the global light vehicle production to grow by approximately 5%. When we look at the safety value per vehicle, we see that there's a significant difference between safety value per vehicle in mature markets compared to that of the emerging markets. With increasing regulatory demands and consumer preferences regarding automotive safety, we expect the safety value per vehicle to grow by approximately 2% per year. This is in line with its historical averages. Taking into account the current market size of $20.5 billion, coupled with favorable light vehicle production and safety value per vehicle outlooks, we expect the market to grow very favorably by approximately 8%. Given the market outlook, let's look at Outlive's market position. As you can see here, Outlive is a clear market leader, and its size is significantly larger than any of its closer competitors across all regional markets. Outlive has been able to stay in this strong competitive position mainly due to four key factors that we would like to highlight. Hence, starting with technology, we see that Outlive currently invests approximately $500 million per year in R&D. These investments in R&D has generated significant new product launches, especially within the field of active safety systems. Furthermore, Outlive is currently the sole supplier who is able to develop an integrated active control system that connects both active and passive safety system into one integrated control system. This new control system not only improves performance, but is also more cost efficient. Hence, through continuous R&D investments, we expect Outlive to stay ahead of its competitors when it regards to technology. Secondly, we have identified that Outlive has a superior global presence compared to any of its competitors. Being local to its customers, they have production facilities across 29 countries. And being close to its customers, they not only reduce lead time, but also cost and improve their customer service towards its global customers. Third, we see that Outlive has significant size advantages and can thereby leverage their economies of scales. If you look at, for example, in China, you can see that Autoliv is significantly larger than any of its competitors. Hence, through leveraging on their economies of scale, Autoliv has the ability to offer its clients a high-quality product at very competitive prices, and thereby being able to take market share in a very important market. Finally, we see that Autoliv has a complete product portfolio. Hence, through the company's product bundling offerings, Autoliv has the ability to fend off any niche competitors to enter the automotive safety market. To conclude, we see that coupled with favorable market growth and strong competitive position of Autoliv, we expect Autoliv to be able to take market shares and hence outgrow the market.
Thank you, Yining. So when estimating the future profitability, we started breaking down the EBIT margin into different levels in order to analyze the volume-driven and variable part of the costs. We then identified several cost drivers to this and analyzed them on a basis of impact magnitude and the future trend development. And what we found was the most influential factor affecting the prices and the margins are the changes in commodity prices. However, we believe that this will be partly offset by the Autoliv's increased sourcing in low-cost countries, followed by the expansion in China. So our overall assessment is that there's a slightly decreasing trend. Hence, we don't believe that the current peak margins are sustainable, but rather they will decrease and stabilize around 10% in the midterm. So the natural follow-up question is what this will mean in terms of cash flow. So according to our forecast, Autoliv will be able to generate around 2.7 billion in net profits accumulated for the next 4 years. Running this into our financial models, this will correspond to around 1.5 billion in operational cash flows, which gives us a cash conversion rate of 55%. And because of this, we believe that we project that Autoliv will be able to remain at the historically low financial ratios of net debt EBITDA of 0.5 and a 50% equity ratio. Now, you might think that this is a little bit conservative, but we think that this should be the case, since Autoliv needs to compensate the higher operational risk with lower financial risk when you take into consideration the high cyclicality and operational leverage in the industry. I'll now hand over to Fredrik with the valuation parts.
Thank you, Keward. So taking these forecasts, we use a discounted cash flow approach and get a target price of $71. For comparison, we also do a scenario analysis and we do a multiple valuation with 2 different peer groups. So you can compare our base scenario forecasts with a bull scenario, where we see a fast recovery in Europe, favorable regulatory changes in China, and only moderate raw material price increases, which leads to $86 share price. And the bear scenario, where global economic slowdown and fast raw material price increases leads to $51 share price. In the multiple valuation, the first peer group are other international automotive safety suppliers, and since Autoliv is the clear market leader, we also compare them to strong Swedish industrial companies. Historically, we can see that Autoliv has outperformed the automotive safety group, both in terms of profitability and growth, and is more comparable to the Swedish industrials. So, we think that Autoliv warrants a higher valuation than implied by the automotive safety group, and given the $80 implied by Swedish industrials, we think that our target price is reasonable. Finally, these are the key investment risks that we highlight in Autoliv. First, there are ongoing antitrust investigations, both in Europe and in the US. At this stage, the outcome is entirely unknown, but in Europe, maximum fine is 10% of sales, so this could have a very large impact. Autoliv has a high operating leverage, and combined with a high cyclicality in the auto industry, Autoliv is very sensitive to macroeconomic risk. There is ongoing pricing pressure, which can see affect all of Autoliv's products, and this can further reduce margins ahead. Around 27% of sales goes to cover raw material costs, so any price increases in these key raw materials would severely impact margins. And finally, 5 largest customers account for half of Autoliv's sales, so loss of important individual customers could have a significant negative impact.
Thank you, Fredrik. And to wrap up, we believe that Autoliv is in a very strong position to keep on outgrowing the market. However, when considering the key investment risks that we have identified, we believe that most of the growth potential has already been priced in the stock, and we therefore issue a whole recommendation at $71. thank you for the time. I know we have some time for questions.